Like its allies, Germany is counting on the threat of economic sanctions to avoid conflict between Russia and Ukraine. But Russian President Vladimir Putin is putting his hopes on China. The question on the table, could China step in as Russia's primary trading partner if the Europeans cut business ties? The European Union is still Russia's biggest export market by far. A third of all Russian goods are delivered to the EU. By comparison, China's share of Russian exports is half that. But in the past 5 years, that gap has been narrowing. Russia's most important export is, of course, natural gas. The EU imports 200 billion cubic meters of Russian gas per year, making Russia's most important gas customer. China currently buys only 38 billion cubic meters of Russian natural gas, but demand in China is growing, and more gas pipelines to China are already being built. Now, for more on this, I am joined by Stephen Chang. He is the director of the China Institute at SOAS at the University of London. Welcome, Stephen. So, are we to imagine China as waiting in the wings for Western sanctions to take effect and potentially pulling Moscow closer?
I don't think the Chinese government is particularly looking forward to a war over Ukraine, but if the Russians should invade and Western sanctions should be imposed, the Chinese government is ready to give Russia a helping hand.
Now, what sort of form would that helping hand take?
Well, it will be, like you say, China becoming a market for a range of Russian raw materials and goods, particularly gas and energy products. China will be helping Russia in terms of the financial services. Again, all these things are helpful to China itself. They are not simply helping Russia out of altruism. It is mutually beneficial for Russia and China.
Well, perhaps you can tell us a bit more about that then. What is in it for China? Especially as we are looking at these two countries, it is not as if they're equally matched in terms of economic might. So what is it? Why is China doing this?
I think China is doing it more than for any material benefits, because the material benefits in terms of enhanced energy security from Russia will have to be counterbalanced by the loss of Chinese interests potentially in Ukraine. Now, where they really want to help the Russians is strategic. Both Xi Jinping and Putin want to make the world safe for authoritarianism. So they share this common strategic goal. They also share a second strategic goal, which is to take the United States down a notch or two in terms of the American global leadership. And against this Russian challenge to NATO and therefore American leadership over NATO is a helpful one from the Chinese government's perspective.
You say that, but it's also worth pointing out that China has also been a key trading partner for Ukraine. They've pursued these ties, especially over the last years. What happens to those ties in the event of a Russian invasion?
Well, the strong economic interest China has in Ukraine, particularly in terms of the Ukrainian agricultural products going to China and Ukrainian jet engines and other weapons, hardwares going to China are the reasons why the Chinese don't really want a war over Ukraine. But the Chinese condition for helping Russia almost certainly will include an arrangement or a promise from Putin that Chinese interests in Ukraine will be looked after and not harmed in the event of Russia using force against Ukraine.
Stephen Chang, he's the director of the China Institute at SOAS at the University of London. Thank you very much for your time today. Financial markets have tumbled in Europe and Asia as the tension between Russia and Ukraine increases, signaling worries among investors of a widespread economic impact of a potential conflict. The trading day began with losses in Tokyo, Hong Kong, and Mumbai. That's as the U.S. government warned that a Russian attack on Ukraine could be imminent. Bad news across Europe, too. Just take Germany's DAX, which fell over 3% on open. Even the stock 600 of top companies across Europe dropped as well. Interesting also the impact on Russian stocks. The domestic-focused MOEX fell, whereas the foreign-focused RTX index tumbled a massive 5% shortly after trading this morning. The only thing to rise? Oil, with investors worried a conflict could hamper Russian oil production. Now, Craig Erlam is a senior market analyst at Oanda. Craig, are you there? Welcome. Craig, do tell us what is behind this reaction. Markets are clearly on edge.
Markets have been on edge all year, whether that's inflation or interest rates. There's certainly been an underlying anxiety in the markets that's been extremely prevalent. We saw a sharp sell-off in January. And this just compounds the issue, really. I mean, obviously, geopolitical risk in itself and the risk of an invasion would be enough to dampen sentiment in the markets. But coming from such an important source of oil and gas means that we are going to likely see further inflationary pressures if this does materialise. We have an extremely tight oil and gas market right now. So the last thing we need is what is seemingly or potentially unfolding. And it's that fear that's heightening the concerns which have already been prevalent for a number of weeks in the markets.
If you can tell us a bit more about what the markets think is going to happen to the energy markets in light of this crisis, Craig.
So we have to remember that the global economy has rebounded much faster than many anticipated, and OPEC Plus, which includes all of the OPEC countries and Russia and a few others, have been gradually returning output by 400,000 barrels per day each month to pre-pandemic levels, which it hopes to hit later on this year. Now, it's struggled to actually hit those levels that it's been trying to achieve each month as it is due to underinvestment and other issues, which means that they've been falling short of target. What that means is we're in a market where demand greatly exceeds supply, which is why prices already for oil in particular is already extremely high. There's also been tighter supplies of natural gas as well. So when we're talking about a conflict or the potential for a conflict which could lead to sanctions, which could lead to oil and gas being used as a weapon, as a counter weapon against the European and US sanctions, then all of a sudden the market starts to view this as a major issue, which is why we are seeing commodity prices in particular rising. And I think that's really having a doubling effect on the stock markets. As I say, sentiment would be soft regardless, but they're coming at such an important time in such tight markets, high inflation, it really does just exacerbate issues which are already existent.
Now, Russia, of course, is quite well integrated in the global economy. That means we can expect ripple effects. So what is at stake here for the economies of Europe, Craig?
The greatest thing from Europe's perspective, from the economy perspective, is the inflation. We've got to remember there's a cost of living crisis now in many countries around the world, and the economy has done very well to bounce back from the rigours of the global pandemic. But if you're piling more misery on households and businesses that are already suffering under the weight of higher oil prices, higher energy prices, higher broader inflation, this has knock-on effects, has ripple effects throughout other areas as well. So we've seen higher food prices. We're now seeing that ripple through to higher wages, higher service costs. So all of a sudden, these inflationary pressures become much more widespread, which is compounding the pain that households and businesses are feeling. And this just threatens to do that more. So 2022 is already shaping up to be a very challenging year for many households and business. And should this escalate into something more serious, then that will only compound those challenges.
A challenging year could get even more challenging. Craig Erlam, senior market analyst at Oanda. Thank you.
Thank you.